Hello, I am Vadani Aryam. This video is about how do you make a chart of accounts? What is a chart of accounts? The purpose of the chart of accounts is to show the list of all the financial reports in the balance sheet, including cash flow and income statement. It gives a way to classify all of the financial transactions that a company conducts in a particular economic time. Companies use the chart of accounts to arrange their records by providing complete list of all the reports in the general ledger of the business. The chart helps to prepare information for calculating the financial performance of the company at any given time. To make a chart of accounts, you must classify account classifications appropriate to your business and then assign a 4-digit number or 3-digit number depending on the size of the company. Numbering system to the funds you make. Even though creating a chart of accounts can be time-consuming, it is an important tool to make the financial health of your business transparent. What is a chart of accounts? A business chart of accounts is a simple list of its financial statements that become a blueprint or roadmap reflecting its financial architecture. Every account in the chart of accounts relates to two important financial statements, that is the balance sheet and the income statement. Such accounts are required when creating a balance sheet for the business. Balance sheet accounts comprise the following. Asset accounts, the general ledger of the company, becomes helpful in preparing a chart of accounts that could easily show the financial performance of the company. Besides, it helps the company to design the end-of-year reporting. It lists all the financial accounts included in the business financial statements. All the information, like a brief description, the name of the account in the list, and the number code for each account will go to the chart of accounts. It starts with the balance accounts and accounts in the profit and loss account, the income statement account. The accounts in the balance sheet are fixed assets, current liability, and shareholders' equity. The charges get broken down into various subcategories. The income statement will have revenue and expenses, and these accounts will show the various subcategories. How to make a chart of accounts? When making a chart of accounts, typically the charges, the accounts listed will depend on the nature of the business. A numbering system is used in the chart of accounts to identify the accounts quickly. The numbering system makes it easy to record a transaction. Small companies use 3-digit numbers and the large companies use 4-digit numbers. Groups of numbers are given to each of the 5 main categories, while blank numbers are for the new accounts added later. Besides, the numbering must be consistent to help the management create the information about the company from one period after the next. Categories on the chart of accounts. Every account on the chart of accounts belongs to 2 main categories, balance sheet and income statement. Accounts in the balance sheet. What are the accounts required to create the balance sheet? Fixed asset and current asset accounts. The asset will have 2 types of investments. They are the fixed assets, like land and buildings, machinery, and more. The current assets are cash at the bank and hand, as well as accounts receivable. You can number every account in the arrangement like 1000, 1020, 1040, and 1060, etc. This is for the maybe for the large companies. Liability accounts. It is an account with a list of categories of debts the company owes to the others. Liability accounts may for many expenses like salaries, invoices, and interest payables. For the liability account, the numbering can start with 2000. It becomes easy to follow in the different accounting periods. Owners of equity accounts, equity represents the value left in the business after taking the liabilities from the assets. The company's shareholders can value the company from the owner's equity. In a small company, retained earnings will be in the equity account, which includes other companies such as common stock and preferred stock. The numbering system will start from 3000 and go up to 3999. Income statement accounts. The elements of the income statement accounts include the revenue accounts and expense account. Revenue accounts capture and record the income that the business requires from selling its products or services. It also includes revenues related to the exact operation of the company and excludes the income that has no connection to the main activities of the company. Some of the subcategories that could be under the revenue account and sales discount account, sales returns account, interest income account, etc. Each revenue gets a number starting from 4000. Expense account. In the last category in the chart of accounts, it includes a list of all the funds used to capture the money spent in making income for the business. The expenses can be tied back to products or revenue generating activities of the company. Each of the expense accounts can get numbers starting from 5000. So prepare this chart of accounts for different categories: asset, liability, equity, revenue, expense account. The asset has all these accounts: cash, accounts receivable, the payment receivable from your customers, inventory, the stocks you use in your business, fixed assets, machinery, furniture, and more. Other assets. Liability also has these accounts: accounts payable, cash payable to your suppliers, salaries to employees, administration expenses, other expenses. It would help if you need to have a workbook to create your chart of accounts in the first sheet of your workbook. So I have given the example of the chart of accounts here. When you watch this video, you can look at I won't put this in the video. You can look at it in the other side of the lecture. I will show you an example as to how to create accounts, say for cash, and then create two columns, one for debit and other for credit. When you record a debit, then another account is credited. I hope you like this video. It is good if you want to prepare a chart of accounts for your business. That chart of accounts is important because the investors, when they look at it, they will be happy to see whether your business is doing well. Thank you very much for watching this video. Thank you. Bye for now.